Our today's speaker, Yashiji Dixit, my fellow colleague, Ashwin Mahuwala. I, C.R. Narang, welcome you all on behalf of Surat branch of WIRC of ICAI. It's a pleasure for us that we have with us a very young and dynamic speaker today between us, CS Yashiji Dixit. Yashri ma'am is going to give us insight on topic annual compliances for companies. But before we move further, I would request C. Ashwin Bawala to please give a brief introduction about today's speaker, ma'am. Over to you, Ashwin.
Thank you, Arun Naran. Let me give a brief introduction of our today's speaker, CS Yashri Dixit. Yashri Dixit is an associate member of ICSI. Apart from that, having a qualification in the Masters of Commerce and pursuing doctorate in analysis of corporate governance practices of selected Indian companies at GLS University, Ahmedabad. She is a certified independent director at IICA also. She has worked as practicing company secretary at Yashri Dixit and Associates and dealt with formation of companies, secretarial audit, IPR related work, IBC and other compliance with listed and unlisted companies. She has teaching experience in business and corporate law, corporate governance and management at undergraduate, postgraduate and professional levels. Her area of specialization is corporate law, IPR and corporate governance. She is the owner of Bhavin Vidya Vihar School located at Taltej, Ahmedabad from the last 5 years. As a visiting faculty, she is associated with various renowned colleges like HI College of Commerce, Umia Girls College, JG Commerce College, and Nirma University. She has also taken online lectures under corporate law at the Indian Institute of Corporate Affairs at New Delhi. She has conducted several executive development and training programs for company secretary students at the Institute of Company Secretaries of India. She has conducted various webinars on intellectual property rights with institutes at the national and international level. She is a MMOC expert faculty member at Gujarat University. She has taken various sessions on DTH channel and at the Educational Multimedia Research Center, Gujarat University, Ahmedabad. She is a woman independent director at Discol Alloys Limited and past independent woman director at RV Denims and Exports Limited and Ketan Constructions Limited. She has contributed a number of research articles in a national and international journal, presented her research work at international conferences in India. Now, not taking much time, I hereby hand over the session to our today's speaker, CS Yashri Dixit. Over to you, ma'am.
Thank you so much, Ashwin sir. A warm welcome you all for session on annual compliance for a company. I am CS Yashri Dixit, practicing company secretary at Ahmedabad. In today's session, I will discuss annual compliance of private companies, public company, and listed company. In 2013, a heavy penalty to those that annual. Maybe the director of the and the company said 2013 radical change in the area applications and the new companies had 2000 plans. The bar corporate governance has been raised and the penalty consequences have been exponentially increased with a large number of sections reserving the provision of the prosecution of directors or key managerial personnel. So it is advised to all those companies who have complied with all the rules and regulations and filed their annual return in their due time. Now let's discuss annual compliance of a private company. As per the latest amendment 13, which effect on the 1st April 2014, and after the commencement of the 1st April 2014, the compliance requirement of the companies have been increased so far. So 5th June 2015, 30th June 2017, there are so many exemptions given for the private limited company. And all these exemptions, the status of the private limited companies under the Companies Act 2013, more or less equal to the status in the Companies Act 1956. Now let's discuss about the meaning of private company. As you all are know, under section 2 subsection 68, the private company, number first, that is restrict the right to transfer of shares. The members which are limited 200, and there is restriction to issue any or subscribe for any securities of the company. So private company cannot issue shares, private company cannot raise funds via IPO, different name or in the same share certificate, then the joint shareholders are counted as a one, and the employees holding of the shares. And yes, the person formerly in employment who purchased the shares during this employment and the limit of the 200. And as you all are aware about that the private company has a no requirement of any authorized share capital. The earlier have a requirement of at least authorized share capital of rupees 1 lakh. Nowadays, if a private company want to incorporate with the 0 rupees capital, so there is no such criteria for the capital. What are the important features of private limited company? Number first, there is no need of minimum capital requirement. As I said earlier, there is no such requirement of minimum capital requirement. Now, any person can start their private company with rupees 10,000 or rupees 1 lakh or rupees 10 rupees. This is the new amendment in the Companies Act 2013. Now, the second point, which have been allowed to accept the deposit from the members without the requirement of the offer circular and creation of deposit repayment reserve, etc. So there is a maximum 100% aggregate of paid up capital and free reserves. So they can accept the deposit from their member. There is no such requirement for any circulation or any creation of DRR, that is deposit repayment reserve. The next one point, that is no need of filing of the board resolution in the form MJT 14 for the ROC compliance under the section 179 subregulation 3. Now the 179 subregulation 3, which is compulsory for all the public company, private company is not required to file MJT 14 for that board resolution. In such a case, if the appointment of the statutory auditor, appointment of internal auditor, in case of the amalgamation or merger, in case of to borrow the money, to issue the securities, to grant the loan, or to give the guarantee to provide the securities. So in these cases, they have not filed MJT 14. Next one, that is loan to the directors. These are allowed subject to the certain conditions which were mentioned under section 185. And even if the members which are related with the company, they can also vote in such a resolution, that is under section 188, that is related party transaction, in the general meeting. So these are the features that the private company, there is no need of requirement of the minimum capital requirement. They can accept the deposit from the members without any upward circular. Number third, that is no need for filing board resolution in case of appointment of any internal auditor, secretarial auditor, or in case of approval of amalgamation, merger, or reconstruction, to grant loans or give guarantee to provide any securities, to approve financial statement and board report. The private company is not required to file MJT 14 in this case. Now we will start important point, that is annual compliance of a private company. Now in the first quarter, we start from the 1st April 2000, whatever the financial year comes, to the 30th June. The first compliance, that is form MBP 1. MBP 1 is basically disclosure of interest by that director under section 184 subsection 1. Now the every director of the company in the first board meeting in which the financial particular year shall disclose his interest in other entities. Now the directors shall disclose their directorship in any other entities, as well as there is a change in a contribution of particular shareholding, then they will disclose in the particular MBP 1. And yes, this is the compulsory form, and this form is not required to file with the ROC. Now, every director is required. Every director, that means every executive director, non-executive director, independent director. So all the directors is required to submit with the company fresh MBP1 whenever there is a change in its interest from earlier given MBP1. So this is each and every year they have to submit MBP1 to the company, whether there has been change in their designation, whether there is a change in the shareholding pattern in the company, whether they appoint or resign any company, they have to mention in their MBP1. So this is the compulsory that they have to submit MBP1 in the initial or each financial year. Next one, that is receipt of DIR 8, Form DIR 8. Form DIR 8 is basically disqualification of directors under section 164 subsection 2 and 143 subsection 3 subsection G. So each and every director of the company in each financial year will submit with the company's disclose that they have not disqualified under the annual compliances or under the any regulation. So these are again the compulsory. Now each financial year on the first quarter 1 April to the June. So in the 4th April they have to submit MBP1 as well as DIR 8. Next one, that is MSME 1 under section 405 of the Companies Act 2013. This is basically half-yearly return, supplies or MSME file with MSME 1. Now, company have to file this return half-yearly in respect of the pending payments to the MSME vendors as at the end of the half year. Now, the date is specified, that is from October to March. The 30th April is the due date, and April to September, the due date is 30th October. So they have to compulsory file MSME 1 for 2 times in a year. In this MSME 1, they have the supplier as well as the PAN of suppliers and the amount of due. So this information is a compulsory for those who have pending the payments to the MSME vendors. If the payment is exceed the 45 days, then this is applicable. If the payment is exceed the 45 days from the due date, then this form MSME 1 is a compulsory file with the ROC. So the 30th April and the 30th October is the due date for filing MSME 1. Now the next important point, that is the DPT3 deposit form under section 73 and rule 16. So this form filed in the month June. So 30th June is the due date for filing DPT3. Return of deposit, company is required to file this form each and every year on or before the 30th June. So the due date of the form is 30th June. In respect of the return of deposit and the particular transactions which are not considered as deposit as on 31st March. So particulars of those transactions by the company which is not considered as a deposit as per the Rule 2, subsection 1, subsection C of the Company's Acceptance Deposits, Rule 2014. Which are the transactions? Number 4, any company which amount received from central government or the state government or any local authority, then this will disclose in this form. Any amount which received from the foreign government, any foreign citizen, any foreign collaborations, any foreign authorities, then they have to mention the amount which they are received from the foreign government or the foreign authorities or the foreign collaboration. And any amount which received from one company to another company, any amount which received from the cheat funds, any amount which received from the needy company, then this amount they have to mention in this DPT3 form. And the certificate from the statutory auditor or certificate is must be required, and it must be filed in the form DPT3. Now this is the quarter 1 form from the April to June. Number first form, that is MBP1 and DIR 8. And yes, MBP1 and DIR 8 are not required to file with ROC. MSME1 and DPT3 is a compulsory form that we have to file with the ROC. Next one, that is quarter 2 and the quarter 2 from 1st July to 30th September. First, we have to consider the approval of financial statement under section 134. The preparation and approval of financial statement and the auditor report shall be attached to the every financial statement. So we have received the financial statement from the auditors and we have to also approve from the board of directors. But yes, in the same case, we have not to file MJT 14 form in this case. Directors report 134. Directors report shall be prepared and mentioning all the information which required for the company under section 134, read with the relevant rules and relevant provision of the other act. Whenever you are prepared with the director's report, there are important points to be considered. Number first, in case of if the company is declared dividend, they have to mention reserves and surplus, number of directors in the company. In case of changes in the directorship, they have to mention in the director's report. Next one, that is number of board meetings during the years, and yes, all the board meetings have a 120 days gap between the earlier meeting and this meeting. So 120 days gap must be required. Apart from this, that is vigil mechanism criteria is there. So we have to also mention the details of any vigil mechanism, any changes in directorship, transfer of shares, any foreign outgoings are there. So we have to also mention in this director report. Director report as well as extract of annual return is a part of director's report. So we have to also prepare extract of annual return in which they have to mention the shareholding pattern of the shareholders, shareholding pattern of the directors, remuneration of directors. So we have to compulsory mention all the details in the extract of annual return. This director's report should be signed by the chairperson if authorized by the board. Whether he is not authorized by the board, then at least two directors, one of the them should be managing directors. So chairperson, if the authorized by the board of directors, then he will sign the board of directors report. If he is not authorized, then at least two directors' signature must be required in director's report. And out of this, the two directors, one must be managing director. Next one criteria, that is holding of annual general meeting under section 96. So every company shall in each year hold in addition to any other meetings, a general meeting as its annual general meeting, and the due date of annual general meeting generally 30th September. It shall be laid with a period of 6 months from the date of closing of financial year. So the due date is 30th September. But due to the COVID period, they have given extension for filing the annual return as well as the holding annual general meeting. So the due date is now 31st December 2020. Notice of annual general meeting under section 101 and the Secretariat Standard 2. So every notice of annual general meeting shall be prepared and sent before the 21 days ago to all those shareholders as well as the directors, auditors, debenture trustees, and all the members of the company. So it is a compulsory to send the notice of the annual general meeting. Next one, circulation of financial statement and other relevant documents. So whenever you send all the documents, you have to check what are the documents which require with the financial statement. Number 4, that is the director report. Second one, which are this is a financial statement, auditor's report, at least 21 clear days before the annual general meeting. So this all are the documents which must be compulsory required under section 136. So the AGM must be held on the September. So the 30th September is the due date. Except in this COVID period, maximum companies are holding their annual general meeting after the 30th September. So 30th September, so the 31st December is the due date for conducting the annual general meeting and sending the notice before the 21 days ago. And this circulation of the financial statement and other relevant documents. In case of AGM, which is called on shorter notice, then above mentioned documents shall be circulated on such shorter period. For holding of the AGM on a shorter notice, companies need to take the proper approval as per the Act. So if any company who wants to hold annual general meeting in the shorter notice or less than the 21 days, then they must take prior approval of the board for this shorter notice for conducting the annual general meeting. And the last one in this quarter form, that is DIR 3 KYC under Rule 12A. KYC of directors, all the directors of the company shall file this form on or before 30th September every year. So nowadays, this form DIR 3 KYC, you can file this form online with the e-filing basis. So you just have mentioned the password, which is sent to the email ID as well as the registered contact number. So you can easily file DIR 3 KYC form. Next one, that is quarter 3, October to December. In this October to December, as we have conduct our annual general meeting as on 30th September. Now, within 15 days, we have to file Form ADT1, that is the appointment of auditor under Section 139 of the Companies Act 2013. We have to file this Form ADT1 for the appointment of statutory auditor for the 5 years. Now the question arises, should we have to file this form each and every year? Then my answer is no. We should not file this form each and every year. If we appoint statutory auditor for the particular 5 years, or in ADT1, we have to mention the 5 years criteria that we have to appoint for the 5 years, then we shall not file this form each and every year. Now, in this case, if there is a change in the auditor or resignation by the auditor or the casual vacancy arises in this auditor, now first of all, we have to file the ADT3 form for the resignation of directors. After that, we have to file the fresh ADT1 of that auditor. Next one, that is annual form EOC 4 under section 137 financial statement, that the company is required to file its balance sheet along with the statement of profit and loss account as well as cash flow statement, directors report and auditors report in this form within 30 days of holding of annual general meeting. So if our AGM is held on 30th September, so the filing of form EOC 4, the due date is 30th October. So within 30 days, we have to file the form EOC 4 with all the attachments: profit and loss account, balance sheet, cash flow statement, director's report, and auditor's report, as well as a notice of annual general meeting. So it must be required in this attachment. Next one, that is 60 days from the date of annual general meeting, we have to file the MGT 7. So the due date is 30th November. So if form filing requirements, annual form MGT 7, section 92, annual return, that we have to compulsory file this form within 60 days of holding of the annual general meeting. And the annual return that we have mentioned the details which are particular financial year from 1st April to 31st March. An annual return of every private company, that is except the small company, should be signed by the company secretary in practices. So it is a compulsory sign by the company secretary in a practice. So we have to file this form EOC 4 and MGT 7. EOC 4 we have to file within 30 days, while the MGT 7 we have to file within 60 days from the date of annual general meeting. Again, the CFSS scheme or the extension of scheme is also applied in this form EOC 4 and MGT 7. So in this criteria, if any company who is holding their annual general meeting in the 31st December, now the 30th December they have conducted annual general meeting. So within 30 days they have to file EOC 4 and within 60 days they have to file MGT 7. Next one, that is certification of annual return and 8 under section 92. So those private companies who having a paid-up share capital of rupees 10 crore or more or turnover of rupees 50 crore or more shall be certified by the company secretary and practices. So those companies who have a paid-up share capital 10 crore or that turnover 50 crores, then they have to take certificate of company secretary in practices for the annual return. So this is a compulsory attachment under the form MGT 7, that is certification of annual return. In this certification, practicing company secretary, they mentioned that they have complied with the each regulations under the Companies Act 2013. They have also fulfilled the criteria if they have accepted the deposit or the conducting the board meeting, appointment of directors. So these are the compulsory criteria that they have to mention in their certification of annual return. Next one, that is quarter number 4. Quarter number 4 will start from the January to March. Now, in the January to is the board meeting, section 173 and under 1. Each and every company is required to hold their board meeting. Two meetings should not be more than 120 days. So it is a compulsion every company hold 4 board meetings in a year, and 120 days criteria must be checked. Next one, maintenance of statutory registers. So it is also compulsory 88 and other sections that the company will maintain the following mandatory registers, that is register of directors. So in case of any addition or the resignation of directors, then we have to mention in the register of directors. Register of director shareholding is again important. Registers of members, registers of transfers in case of transfer of shares, registers of related party transactions. These all are the registers which are compulsory to maintain by the company each and every financial year. Apart from this, the company have to prepare the minutes of all the board meetings. Now, if company conduct the board meetings for a quarterly, then any board meetings which are held within 30 days, the minutes must be signed by the chairperson. So it is the part of compliance that the company must be prepare minutes for all the 4 board meetings which are held in the particular financial year. So this is the compliance which are the compulsory for the private company. I have divided into quarterly, quarter 1, quarter 2, quarter 3, and quarter 4. Quarter 1, as I said, we started from the April to June. The first, as I said, the MBP1 and DIR, it is not required to file with the ROC, but yes, we have to taken this receipt of DIR8 and MBP1 from all the directors, either independent directors, either executive, non-executive directors. Next one, MSME1. Yes, it is a compulsory. Deputy 3, it is also compulsory. That 5. MSME, the due date is the 30th April. So on or before the 30th April, we should file the form, MSME1 form, for the particular half-yearly period. For those vendors who are registered with the MSME, only those vendors who are registered with the MSME. And the second criteria, that the payment for the 45 days. So the time limit of the payment is exceed the 45 days. Then compulsory, we have to mention this detail in the MSME1 form. Next one, that is E-form DPT3 deposit. If any company during the year or during the financial year accept the deposits which are from central government, state government, foreign government, any local authorities, any needy company, one company from other companies, then they have to mention this detail that this type of deposits which are not considered as deposit. So we have to select in the PT3 form number third point, that is the particular transactions which are not considered as a deposit as on 31st March. And here the certificate from the practicing chartered accountant is a must be compulsory to take in this case. Next one, that is important quarter for the July to September, because in this quarter we have to schedule annual general meeting, we have to prepare the director's report, we have to approve the financial statement. So we should give important for the whenever we are preparing the director's report as well as the financial statement. So first of all, we have to prepare and approve the financial statement. After that, the director's report must be prepared. And yes, director's report must be signed by the chairperson if it is authorized by the board. If the board is not authorized, then at least 2 directors' signature must be required. And out of that, 1 must be managing director. Compulsory for all the companies. Private companies, either public company, public listed or unlisted company, they must be required to before 21 clear days. And this notice must members, directors, auditors, debentors, trustees. We have must be sent notice. So they have aware about the annual general meeting of this particular company held on so and so date. And the DR3 KYC form, that is again important, because if you not file this form on a due date, the heavy penalty will be charged by the ROC. So it is a compulsory that we have to file this form on or before the 30th September each and every year. So now if there is a no change in this form DR3 KYC, either the details of the directors or something like that, then after that we have to compulsory file this form on or before the 30th September. If you file this form after the 30th September, then the 5,000 or maybe the more than penalty will be charged by the ROC. ADT1, unless and until if you appoint the auditors for a 5 years period of time, previous year, and you have filed ADT1. Now this year you don't require to file ADT1. So again, it is a compulsory. Important EOC4 and MJT7. EOC4, that is for a financial statement, and financial statement which includes the attachment and a balance sheet, profit and loss account, cash flow statement, director's report, auditor's report, notice of annual general meeting, director's report. All these are attachment of the EOC4 and the MJT7 within 60 days of the holding of annual general meeting, and the annual return will be period from the 1st April to 31st March. So here the annual return, the compulsory, which is signed by the company secretary in practices. Now the certification of annual return is a must be required in case of the paid up share capital 10 crore or more or turnover 50 crores or more. Apart from those companies who having the paid up capital which is less than 10 crores or the turnover which is less than 50 crores, they are not required to take the certificate from the company secretary in practices. And after the completion of this year, from the January to March, we have to check that the company have scheduled the board meeting for the 4 times in a year, and the gap between not more than 120 days. After that, we have to check that all the register is a must be maintained, either register of directors, register of charges, register of directors, shareholdings, register of investment, register of members, register of transfer, register of related party transactions. So it is duty to check that all the register must be maintained on a time. And the next one, that is minutes of the board meeting. Minutes of the board meeting must be signed within 30 days from the scheduling of the board meeting, and it must be signed by the chairperson of the company. So it is a compulsion part for maintaining of the register or the scheduling of board meetings or the maintaining the minutes of the particular board meeting. Now moving toward the annual compliance of a public company. Till now we have checked that what are compliance required for the private company. So these are the fixed compliances that the MBP1, DIR8, MJT7, EOC4, DIR3, KYC, MSME1, DPT3. Now the same compliance is also applicable to the public company. Now, apart from this compliance, what are the compliance which are necessary to file for the public company? Now, meaning of public company. So public company, those which is not a private company in a simple language, or this definition is mentioned under the Companies Act 2013. So the public company means a company which is not a private company. So which is provided that the company which is subsidiary of company, not being a private company, shall deemed to be public company for the purpose of this act, even where such subsidiary company continue to be private company in its article. So public company means those companies who have a not private company in a simple definition. There are certain important features of a public company as which are in the same is in private company, that again the public company which is no need of minimum capital requirement. So if you want to incorporate any public company with the fund of rupees 5, or you can say that 10,000 or 1 lakh, you can start or you can incorporate public company. So there is no need of minimum capital requirement. Second one point, that is all the shares should be in a demat, whichever from 2nd October 2018. So now it is a compulsory for public company that the shares must be in a dematerialized form. So demat shares must be required. Physical shares is not required. So dematerialization is in a public company. If crossed a certain limit of turnover or the net worth, then the provision of the secretarial auditors must be applied. So if the public company having a turnover 100 crores or more, or the net worth 300 crores or more, then that company is required to appoint secretarial auditor under section 203. So this is again compulsory for all the public companies. Minimum number of 7 in case of the public company, 2 members for in case of the private company. Quorum of the general meeting shall must be present of at least 5 members. And the loan to directors, so there is a restriction to give a loan to the directors or the relative of directors or the relative of the firm of their associated partner. So this kind of loans are strictly prohibited. There is a need to file MJT 14 for all the resolution which is passed under section 179 subsection 3. So in case of public company, appoint any internal auditor, or in case of appointment of secretarial auditor, or a loan to directors, or issue of any securities, or borrow the monies, or given guarantee to any other person, then this is a compulsory required to file form MJT 14 for all the resolutions or in case the public company is also required to file MGT 14 for the approval of the financial statement and the board of director report. Next one, the provisions of the key managerial personnel, managing directors and whole-time directors are also applicable on the public limited company. So they have to compulsorily check whether they have to appoint the managing directors, whole-time directors, or there are certain criteria which is mentioned in the Companies Act 2013 for the limit for the appointment of key managerial personnel under Section 201 of the Companies Act 2013. Now, the remuneration of directors which are restricted as per Section 197 of the Companies Act 2013. So basically, the remuneration which are restricted, 197 state that the remuneration should not exceed 11% of the net profit of the company. Now they cannot exceed the remuneration part beyond that 11% of net profit. So this is again restriction in case of the remuneration of directors. So these are the important features of the public company. The first one, that is the minimum capital requirement. So nowadays, ease of doing business, if anyone who want to start their business with the zero capital or rupees zero capital, they can start their company or private company or a public company with the 10,000 rupees, with the 1 lakh or whatever the amount they want, they can start their company. Now in public company, they are compulsory to requirement of the demat form. There is a physical form of the shareholding are not compulsory in case of the public company. Secretarial auditor appointments are also compulsory in the specified criteria. Minimum number of the 7 members in case of the public company. Down to directors and relative of directors are strictly prohibited, and they have to compulsorily file MGT 14 for all the resolutions which are mentioned under 179 subsection 3. And they have to appoint the key managerial personnel, managing directors, whole-time directors, and the remuneration must be as per Section 179 of the Companies Act 2013. Now, apart from compliances, as I say, such as and the first quarter, that is from April to June, we have to take receipt of MAP 1 and DIR 8 for all the directors, either independent, executive, non-executive directors. So we have to receipt of 1 and DIR 8 from all the directors. So again, this is the first quarter compulsory as applicable in a private company. That is in same quarter, MSME 1 and DPT 3 is also the compulsory form that we have to file with the ROC. Next one form, that is MGT 40 under Section 117 and read with the 179. As I said, all the in Section 179 subsection 3 that they have mentioned that if the appointment of internal auditors, secretarial auditors, or the issue of the securities, they have to compulsorily file MGT 14 with the ROC within 30 days. Apart from this, in case of approval of financial statement or the director's report, they have to also file MGT 14 in the said case. So MGT 14 is the most required to file in case of the approval of director's report as well as the financial statement. Next one, that is event-based forms, that is form Band 2 and the Band 2 under Section 90 of the Companies Act 2013. This is the disclosure of significant beneficial owner. So the company must have to file Band 2 within 30 days of the receipt of Band 1 from the shareholder. Now, this form is not compulsory for all the public companies. This form, the purpose of this form is to declaration of the holding of a reporting company or the declaration of the significant beneficial ownership. So this is a form which companies who have a significant beneficial owners, and this company are required to file Form Band 2 within 30 days from receipt of Band 1. Now, SBO, this is significant beneficial owners in relation to reporting company, referred to a person in a subsection 1 of 90, that is Companies Act 2013, who possess certain rights in a company, rights such as holding 10% or more shares in the company or enforcing voting rights of the 10% or more, then these companies are required to file Band 2 within 30 days from the receipt of Band 1. Next one, that is half yearly return form PAS 6 introduced this form PAS 6 before 2 months ago, Rule 9A subsection 3. So this form is compulsory to file all the public companies. So reconciliation of share capital audit report. So earlier the listed company are directly filed this reconciliation of share capital audit report with the listed company. But nowadays MCA introduced this form because of they want to check the physical shares and the dematerialization of the shares of the company. So as I said, the public company has a compulsory dematerialization of their shares. So this form is basically that all the shareholders are having their shares in the dematerialization form. So this company, each and every public company is required to submit this reconciliation share capital report with the ROC, which is audited by practicing company secretary as at the end of the half year. So basically for the half year from April to September, we have to file this form on the 30th October, and the October to March, we have to file this form on 30th April. And in this form, we have to compulsory attach the certificate from the practicing company secretary. As of now, there is no such compulsory attachment required, but it's a good practice that we have to attach the certificate from the practicing company secretary under this PAS 6 form. PAS 6 is same, is it like that whatever the information that we are mentioning in the reconciliation share capital report, this same information we have to put it in this PAS 6 form. And it is a compulsory form. We have to compulsory file this form half yearly. The due date is the 30th October as well as 30th April. AOC for XBRL. So there are certain companies, public companies, who have to file this AOC for XBRL. Private company are filed this form only AOC 4, but there are some of the companies who have compulsorily filed AOC for XBRL. So what are this company, or there are certain following class of the company shall file their financial statement and other documents under section 137 of the Act with the register in e-form AOC for XBRL. Now, what are these companies? Number first, the companies which are listed with the stock exchanges in India, they're Indian subsidiaries. So as listed companies who are listed either BSE or NSE, they have compulsorily filed this annual return AOC 4 with the XBRL mode. Next one, the company is having a paid up capital of 5 crore or rupees more, then this is again compulsory that they have to file AOC for XBRL. Next one, that is company is having turnover of 100 crore rupees or more, then this is again they have to compulsory file AOC for XBRL. All the companies which are required to prepare their financial statement in accordance with the company's Indian accounting standards, this is again required to file AOC for XBRL. Now here the question arises, if the company in this year they have the paid up capital of 5 crores or more, but in the next year they are planning to reduce their paid up. In vice versa case, if the company's turnover now 100 crore rupees or more, but in the next year the turnover of 50 crores rupees or more. Now, once you file AOC for XBRL, then each and every year you have to compulsorily file AOC for XBRL. You cannot switch over the form from AOC for XBRL to AOC for only form. Once you start filing with the XBRL, then each and every year you have to compulsorily file AOC for XBRL. Again, if the turnover is not 100 crore rupees or more, or the paid up capital is not 500 crore rupees or more, then we have to compulsorily file AOC 4 in a XBRL mode. Next one, that is AOC 4 CFSs, that is the Consolidated Financial Statement under Section 137 of the Companies Act 2013. So the financial statement which was adopted, then the company shall file the adopted consolidated financial statement via AOC 4 CFSs, Consolidated Financial Statement, within 30 days of the annual general meeting. As I said, the AOC 4 XBRL form AOC 4, we have to file within 30 days from the annual general meeting. So AOC 4 CFS, again we have to file within 30 days from the annual general meeting. So it is a compulsory to all those companies who have their subsidiaries companies, and they have to file CFSs, Consolidated Financial Statement. Next one, that is the Secretarial Audit Report under the form MR3 under Section 204 of the Companies Act 2013. So all the company, number first, that is all the listed companies and every public company having the paid up share capital of rupees 50 crores or more. or every public company having turnover of rupees 250 crore or more, this company are required secretarial audit, or this company have to take this certificate from the practicing company secretary. And this is a part of the director's report. So under section 204, these are the compulsory for all the company, all the listed company, as well as all the public company having the paid up share capital of 50 crores or more, or the turnover to 50 crores or more. Now they have to compulsory take the certificate from the practicing company secretary. Now this is the role of the practicing company secretary, that they have to check each and every regulations of the company, whether the company has followed or not. They must be given not qualified report because the company has not complied with the each and every regulation. But this is the compulsory to give the secretarial audit report for the specified company, and the form MR3. Next one, that is form MR1, that is section 196. Form MR1, that is written of appointment and reappointment of the managing directors or whole-time directors or a manager or key managerial personnel. Now, in case of appointment of any independent directors or managing directors or whole-time directors or a manager or key managerial personnel, we have to compulsorily file MR1 within 30 days from the passing this board resolution. Next one, that is form DIR 12, appointment of any independent directors or the appointment of women directors. Now, under section 149 of the Companies Act 2013, said that if the company which is having the paid up capital of rupees 100 crore or more, or the turnover 300 crores or more, this company are compulsory required to appoint woman independent director in that company. Now, if the same company is appointed any woman independent directors, either public company or public listed company, they have to compulsorily file this form DIR 12. Next one, that is the form MGT 14 under section 138. 13 in case of appointment of internal auditor. Now, internal auditor is not compulsory for a specified company, but under section 138 they have mentioned the specified criteria for the appointment of internal auditor. First criteria, that is all the private company which having the turnover of 200 crore or more, or who having the outstanding loans, borrowings or deposits of rupees 100 crores or more, then that company are required to appoint internal auditor. Apart from this, unlisted public company having that paid up capital of 50 crores or more, turnover 200 crores or more, or outstanding deposits 25 crores or more, outstanding borrowings from bank or financial institutions 100 crore or more, that company are required to appoint internal auditor in that company. So this is, we have to file within 30 days from the appointment, we have to file MJT 14. And in this MJT 14, the attachment, board resolutions and the appointment letter is the most we require. So these are the annual complaints of a public company, and these are some of are compulsory, some of are event basis, some of are the early which are compulsory. As I said, the private company, those complaints which are compulsory in a private company are also compulsory in a public company as well as listed company. So as I said, the DIR 3 KYC, MVP 1, DIR 8, MJT 7, EOC 4 either in public company, that is EOC 4 XBRL, EOC 4 CFSs. So we have to file within due date. So this is our responsibility, that we should take care of our clients, that we should file this all the information within specified time period. So we should avoid the penalty, heavy penalty from the ROC. Because MGT 7 and EOC 4, they have to increase their penalty if we are not filing within due days. So the time period of AOC 4 is within 30 days and MJT 7 is within 60 days. So each and every form, if we will not file within a stipulated period of time, then the heavy penalty which charged by the registered company. So these are the compulsory form MJT 14. So this is the first that once we have approval of the financial statement and director's report, compulsory we have to file MJT 14 with the registrar of the company. And nowadays, before the 2 months ago, this form is introduced, PAS 6, reconciliation of share capital audit report, and it is must be audited by the practicing company secretary. And the due date is the 30th October, and now the next due date will be the 30th April. Now in this PAS 6, one more point, that is in PAS 6, we have to collect one certificate from our registrar and trademark from RTA. Because of in this certificate we have to verify that this much amount of the shares are in demat form and this much amount of the shares are in physical mode. So on the basis of that, we have to prepare our reconciliation share capital audit report. Next one, that is, as I said, there is a no minimum criteria is a must be required. AOC4 XBRL is a part for only 4 companies, and once you start filing AOC4 XBRL, each and every year you have to file this form with only the XBRL mode. You cannot switch over XBRL to only the form AOC4. Consolidated in case of the companies who have their subsidiaries company, now only this company are required to file AOC4 CFS. MR3 compulsory only for those or the listed company or every public company having their paid up share capital of 50 crore or 250 crores or more. Only and only these companies are required to appoint secretarial audit report. Next one, that is MR3. This is only for the appointment or the reappointment of managing directors, whole-time directors or manager. This form is not required for the appointment of any independent directors, but yes, in case of key managerial person, appointment of any company secretary, then CEO, CFO who are considering as a key managerial personnel, then this form is compulsory required under the MR3. DIR 12 is again important for appointment of any directors, appointment of independent directors or women independent director. Form MGT 14, that is under section 138, appointment of internal auditor. So so far we have seen that the appointments of directors, and we have to file the DIR. There are necessary and there are some of the compulsory compliances and there are certain voluntary compliances, but we have to do this compliance on a due date basis. So far we have seen that annual compliance of a public company as well as the annual compliance of a private company. Now we have to check what are the annual compliances of the listed company. Again, listed company means a company which is of its securities which is listed on the recognized stock exchange. Recognized stock exchange, either the BSE, NSE stock exchange, they have to these are the considered as a listed company. Now the listed company not check only the companies at 2013. They have to also check the SEBI LODR regulations. So listed company must be complied with all the rules, regulations which are specified under the Companies Act 2013 as well as the SEBI LODR regulation 2015. And since there are so many amendments in the LODR regulation, so they have to also follow all the regulations. Apart from these regulations, they have to follow like the Electricity Act, Water Act. What are the acts which are applicable to company? This must be compliant with that. What are the important features of listed company? So first point, that is all the shares should be in demat form. So this is a compulsory that all the listed company that shares must be in a demat form. Physical shares is not required in case of the listed company. While in a public company, there may be physical shares or there may be demat share. But in case of the listed company, that all the shares should be in a demat form. Next one, that is a provision of secretarial auditor shall be applicable on listed company. As I discussed with you in earlier point in a public company, that the secretarial auditor are compulsory for all the listed company. So now all the listed company have to take the secretarial audit report from the practicing company secretary. Next one, loan to directors and relative of directors are again strictly prohibited. So the public company and the listed company, loan to directors and relative of directors are strictly prohibited. Again, listed company, they have to file each and every resolution which are passed by the board of directors in the board meeting. They have to compulsory file this resolution in the form MGT 14 within 13 days. So either they have, in case of creation of such charge, or in case of any appointment of internal auditor, appointment of statutory auditor, appointment of secretarial auditors, or any given guarantees, securities, issue of any securities, then each and every resolution which are passed by the board of directors, and they have to compulsorily file MGT 14. Next one, the provision of the key managerial personnel, managing directors and whole-time directors are applicable only to the listed companies. Remuneration directors, as per restricted, 11% of the net profit, which are mentioned under section 197 of the Companies Act 2013. Independent directors is a must to be compulsory and non-mandatory to appointment of independent directors in their board. So the independent director's appointment must be compulsory, and at least one woman independent director must be required in their board. Women independent directors are mandatory to appoint. So each and every listed company have at least one women independent director in their board. CEO, CFO are must be mandatory to appoint. So all the composition of the board of directors in their board, there is a one managing director, one chairperson, independent directors, as well as non-executive directors or executive director, CEO, CFO. So all this appointment is a must in case of listed company. So many compliances required under listed company compared with the private company. Compliances in the case under the as well as the SEBI regulation, apart from this FEMA Enforcement Act. So we have to also comply all these regulations. Next one, that is annual compliance of a listed company. So again, annual compliance of listed company. So far we have seen that the NBP 1, DIR 8, next one that is DPT 3, MSME 1, approval of financial statement, approval financial statement director report we have to file under the MGT 14 form. So this is again required as under the first quarter. Next for MGT 7, once we have hold annual general meeting, then within 60 days, we have to file this annual return. An annual return of the listed company mandatory require the signature of company secretary in employment. An annual return must be filed with the ROC with the digital signature of director as well as company secretary who are in employment. So here there is a DSC of practicing company secretary is not required. Only the digital signature of the company or company secretary and the compliance officer, they have to only require a DSC in this form MGT 7. MGT 8, again, it is a compulsory part that we should attach in the MGT 7, that is certification of annual return. Now, in the said case of MGT 8, they have to check each and every regulation, whether the company had complied with the Companies Act 2013, as well as the CBRODR regulation, whether the company have conduct the board meetings during the year, whether the company has a proper audit committee, nomination remuneration committee, CSR committee, and risk management committee. So whether company has complied all these things, whether company has appoint statutory auditor, appoint the internal auditor. So these are the criteria that must be mentioned in this certification. Or if the company had not proper rules and regulation, not followed with the proper rules and regulations, and they have mentioned this in disqualification criteria. Next one, that is form MGT 14. Now, in a private company or a public company, they are not required to file form MGT 15 under section 121 of the Companies Act 2013. Now, what is this form? Form is basically MGT 15. It's a company shall prepare in the report on each annual general meeting. So this is a report that what are the resolutions which is passed under the annual general meeting. So we have to just put it the information that these are the resolution which is passed under the annual general meeting. Now in the said case, as I said, that the private company or public company which are not required to file MGT 15. Private company or public company, again the annual general meeting, they have passed their ordinary resolution as well as a special resolution. Ordinary resolution for the appointment of the statutory auditor, appointment of any directors. So in case of remuneration, so these are the compulsory ordinary resolution that they have passed. But in the said case, they have not filed MGT 14. This form MGT 14 is only required to file by the listed company for the report of annual general meeting, that the so and so business are considered under the ordinary business and so business are considered as a special business. So it is a compulsory that they have to file this form within 2 days. Next one, that is e-voting under section 108 of the Companies Act 2003. Voting through the electronic means. It is a mandatory for all the listed company to provide e-voting facility to their shareholders, because there are possibility that some of the shareholders are not coming to attend the annual general meeting due to the time constraint. So they have compulsory to give this facility e-voting to each and every shareholder. Next one, that is the postal ballot. Voting through the postal ballot is a compulsory mandatory for all the all the shareholders, and it is a compulsory for all the listed companies, so they should given facility either e-voting or either for postal ballot. In this COVID situation, they have given this postal ballot situation is not required, so they have only taking voting via the e-voting. Next one, that is secretarial audit and secretarial audit report under section 204 and 205. So all the listed company are compulsory required to appoint the company secretary in a practices, so they have to file this MJD 14, and the form of this particular report is the MR3. So in this annual report, now the listed company's annual return is an important part. In this annual report, first one portion, that is the notice of annual general meeting. Second one, that is the director's report. Third one, that is the corporate governance report. Next one, that is the extract of annual return, is again the part of director's report. Extract of annual return, MR3, MJT 14. Now, that is the internal auditor, section 138. So all the listed companies are required to appoint internal auditor by filing the e-form MJT 14. So the appointment of internal auditor is a must be required in case of the listed company, and they have to compulsory file this form MJT 14 within 30 days. Next one, that is the constitution of audit committee under section 177 of the Companies Act 2013. A listed company is required to constitute its audit committee, and meeting of audit committee will be as per the secretarial standard 1. So audit committee must be constituted as mentioned under section 177 of the Companies Act 2013. Next one, that is the nomination and remuneration committee. So the nomination and remuneration committee under section 178. So a listed company is required to constitute a nomination and remuneration committee as per the secretarial standard 1 and under the section 178 of the Companies Act 2013. So all the listed companies are required to hold this committee, audit committee, nomination remuneration committee, and the stakeholder relationship committee. This committee are compulsory under the Companies Act 2013, and as mentioned in Secretarial Standard 1 or SEBI Allodier Regulation 2015. Stakeholder Relationship Committee under section 178 of the Companies Act 2013. A listed company is required to constitute its stakeholders relationship committee, and meeting of committee will be as per Secretarial Standard 1. Vigil mechanism. Section 178 of the Companies. A listed company is required to constituting policy of vigil mechanism. Now, this vigil mechanism is a criteria which is compulsory for a listed company. It's not compulsory for a private company or a public company that they have to mention this vigil mechanism under this director report. But yes, in case of listed company, they have to compulsory mention this director report about their vigil mechanism. Listed company has also prepared certain policies regarding the independent directors' appointment, regarding the remuneration policy, regarding their employment. So this is compulsory part to prepare this policy, and this policy is prepared by basically board of directors and company secretary. So this is again the compulsory. But this audit committee, nomination and remuneration committee, and the stakeholder relationship committee, which must be as per the SEBI Allodier regulation, also they have to conduct this audit committee meeting and nomination remuneration committee meeting on a time. So basically, the audit committee meeting is a required conduct of the audit committee meeting within 4 times in a year. So it is again compulsory. And where is it mentioned? So it is mentioned under the SEBI Allodier Regulation 2015. Same in case of nomination and remuneration committee. So nomination and remuneration committee is a compulsory. SEBI Allodier Regulation 2015 said that at least 2 times meeting during the year must be required. Next one, that is independent directors committee, whether independent directors check whether the performance of directors is proper or not. So this is again this one is a new committee, that is a directorship committee. Stakeholder relationship committee is prepared for the proper rights of the shareholders or the stakeholders. There are so many committees which are voluntary, such as risk management committee, but again they have specified the criteria for constitution of the risk management committee. So these are the forms and these are the compliances which are required under the Companies Act 2013. MGT 7, MGT 8, MGT 15, e-voting, postal ballot, secretarial audit under MR3, and they have to prepare this report in MR3, but they have to file this form under MGT 14. Internal audit, appointment of internal audit, it's a compulsory that they have to file this MGT 14 within 30 days. constitution of audit committee, nomination and remuneration committee, risk management committee, stakeholder relations committee are compulsory. One more committee is that is the CSR committee. Now the CSR committee is again important part for this listed company. CSR committee, at least one meeting during the year is required. This committee is approved for all these expenditures which are covered under the CSR. So CSR committee is also important. Second one portion that I want to say is that in audit committee and nomination remuneration committee, maximum composition is independent directors. So in case of the audit committee, chairperson is a compulsorily independent director of that company. And the chairperson is a must be non-executive director as well as the independent director. So there is a compulsory 3 directors must be in a audit committee. In listed company, approval of financial statement by the board of directors. So before this approval, we have to take the permission of audit committee for approval of financial statement. So audit committee's criteria that they have to check that the auditor has prepared proper financial statements, they have to approve. If they have any objection, that they can ask to the statutory auditor of that company. So this is again important committee, audit committee. For appointment of any directors, in case of increase the managerial remuneration, then we have to take the prior permission of the nomination and remuneration committee's chairperson. So if they permit to appoint any director, then we can directly, after that we can directly appoint a board of directors, then appoint any directors in that company. Stakeholder relationship criteria, if the more than 1,000 shareholder in that company, then it is a compulsory to constitute stakeholder relationship committee and vigil mechanism. Then one more point, that is in directors report or in this corporate governance report are important in case of the listed company, because in directors report we have to mention the number of board of directors meeting as well as the audit committee constitutions, number of meetings held for this audit committee meeting, number of held meeting under nomination remuneration committee. In case of changes in designation, in case of changes of any business, vigil mechanism, sexual harassment of any employment. So these are the compulsory points that we should mention in this director's report. Corporate governance report, again, it is an important part of that, because corporate governance, we should include about the audit committee, we should include the nomination remuneration committee, we should include each and every director, whether during the meetings, whether they have attended meetings, board meetings, whether they attend annual general meetings, whether they have attend extraordinary general meetings, whether they have attend this committee meeting, if they are directors. So the present of yes and no, it is a must be required. So this is the important, or this is a important compliance in the corporate governance report. Now there are certain quarterly compliances are must be required. So what are the quarterly compliance is required? So quarterly compliance, this is number 4, that is the shareholding pattern. Shareholding pattern under regulation 31, sub-regulation 1, sub-regulation B. So shareholding pattern within 21 days from the end of quarter. So if our first quarter, which will end on the 30th June, so within the 21 days, so it is 21st July is a due date for submission of the shareholding pattern to the BSE or BSE. This shareholding pattern which shows that if there is any changes in the shareholding pattern by any other shareholder, promoter or director of the company, so they have to mention in this pattern. Now this report which will be given by the RTA, so once RTA which will given the report, then we have to directly submit to the BSE. And this is the responsibility of the company secretary that they should upload the shareholding pattern with the BSE. Next one, that is the corporate governance report. Again, we have to submit this report.
Along with the limited review report, auditor's report within 45 days from the end of the quarter. So regulation 33 subsection say that we should file financial results with the BSE within a 45 days from the end of this quarter. So it is a compulsory. Next one, that is reconciliation of share capital audit report. Now in the public company, we have seen that we have to file the form PAC 6 for the reconciliation of the share capital audit report. Now in the listed company, they have to submit this reconciliation of share capital audit report, which is given by the practicing company secretary to the BSE, and within 30 days from the end of the quarter. So 30 days is almost important. Statement of grievances redressal mechanism, it is again important. If the shareholder, if any query regarding for dispatch of notice or dispatch of notice, or in case of anything, then they have to ask with the company, and they have to compulsory resolve this query within a 21 days. So if there are any query which is not resolved within stipulated period of time, then they have to mention that this query will not be resolved within specified period of time. So within 21 days, it's important that we have to file this statement within 21 days from the end of this quarter. Next one, that is the regulation 7 subregulation 3, that is a share transfer agent compliance certificate. Nowadays it is a compulsory that we have to take this compliance certificate from the RTA, registered and transfer agent, within 1 month from the end of each half financial year. Now our financial year, which will be ended on the 30th September, so we have within a 5 to 10 days, we have to ask our RTA to submit their compliance certificate, and we have to submit this compliance certificate to the BSE. Next one, that is the transfer or transmission or the transposition of the securities. So within 1 month of the end of each half of the financial year, we have to intimate to BSE under the regulation 40 sub regulation 10. So this is a half yearly compliances, and which are the compulsory that we have to intimate each and every information to BSE, Bombay Stock Exchange. What happens if you do not intimate? And again, they have charged per day 1,000 rupees penalty per day, since if you have not filed this return, or if you not intimate with the BSE within a stipulated period of time, then 30 days is a, you cannot file, you have not filed within 30 days, and 30,000 may be the penalty that you will have to bear. Next one, that is annual compliances, that is number first, that is regulation 14, fees and other charges to be paid recognized stock exchanges. So within 1 month of the end of the March 31, we have to compulsory to pay the fees to the stock exchange. So whenever our financial year is a end, so the 31st March, so within 1 month we have to pay the fees to the recognized stock exchange, either BSE or the NSE. Regulation 24A, secretary audit report within 60 days from the end of the financial year. Now this report is a compulsory to file with the BSE. In case of the public company, only file this report. The format of the report is MR3, and this report is attached with the director's report. So there is a no specified form that we have to file the secretarial audit report in this particular form. But in case of the listed company under regulation 24A, it's a must be required to intimate the BSE, and we have to submit this report to the BSE within 60 days of the end of the financial year. Apart from this, one more point I want to say, that unlisted material subsidiary, in this regulation they have mentioned that all the listed company and unlisted material subsidiary are compulsory to give their secretarial compliance report under regulation 24A. Now it is a compulsory that within 60 days of the end of the financial year, it is a compulsorily file. Next one, that is a regulation 33 subregulation 3 is financial results along with the auditor's report. So it is a compulsory that within 60 days from the end of the financial year, we have to compulsorily submit auditor's report and intimate to BSE. Next one, that is annual report, not later than day of commencement of dispatch to its shareholders and not less than 21 days before the annual general meeting. So once it notice dispatch to the shareholders, then we have to also submit this annual report to the BSE. So these are the annual compliance that we have done during the year. It's a that we have to we have to pay the fees to recognize stock exchange once our financial year ended on the 31st March. Next one, as I said, regulation 24A, secretarial or compliance report. Now there is changes in these regulations, or you can say in the Companies Act 2013 section 203, while in LODR regulation, this regulation 24A, whenever you submit this report under the listed company, then you have to mention section 203 and regulation 24A secretarial compliance report. So we have to check both the way, either Companies Act 2013 or SEBI LODR regulation. So it is a compulsory that we have to file this compliance report under regulation 24A within 60 days of the end of the financial year. Apart from the on the same date, we have to also file the financial results along with the auditor's report. So within 60 days, we have to file this financial results also with the along with the auditor's report. And last one, that is annual report. Now in annual report we have to mention each and every detail, so that any directors or any members who have not received this annual report on the email or via speed post, then they will be easily checked in the BSc website. So again, it is a compulsory that we should take care of this annual report whenever we are preparing that annual report, which includes the director's report as well as the corporate governance report, extract of annual return, secretarial audit report, or statutory audit report. This we have to include it in this annual report. So these are the annual compliances which included in this listed company. The compliances which I have divided two parts. The first one, that is the Companies Act 2013, and the second one, that is the SEBI LODR regulations. Now Companies Act 2013 compulsorily compliance, that is MJT 7, MJT 8. Now here we have to take MJT 8 certification of annual return from the practicing company secretary, and the same we have also received MR3 secretarial audit report from the practicing company secretary, as well as under regulation 203 and under section 203 and regulation 24A. So we have compulsory to take this certificate from the practicing company secretary. MGT 15 for private company, public company, it's not required to file MGT 15, while it is a compulsory to file all the listed company to file MGT 15 to prepare this report on annual general meeting. As I said, whatever the ordinary resolution or the special resolution passed during the annual general meeting. E-voting, it's again compulsory. Now this e-voting criteria is not compulsory for the private company. Postal ballot is again compulsory for the listed company. Secretarial audit report is again compulsory. Internal auditor, public company or the private company which having the turnover 200 crores or more during the particular financial year, or the outstanding loans borrowings which 100 crores or more, these companies are required to appoint internal auditor. Audit committee, this constitution of committee, audit committee, nomination and nomination committee, risk management committee, CSR, this is only compulsory in case of listed company. Public company or the private company are not required. Next one, that is a vigil mechanism. It's again the compulsory part of all the listed company. These are all the quarterly compliance. This quarterly compliance we should check from each and every quarter, not for the particular quarter. So the 4 quarters we have to submit the shareholding pattern, we have to check the corporate governance report, we have to check that the financial report along with the limited auditors report. So once audit report is approved by the audit committees, then we have to, within 45 days we have to update with the BSc. So we have to file reconciliation of share capital audit report within 30 days from the end of the quarter. So once our quarter is completed, we have to submit our reconciliation share capital audit report and the regulation of 13 sub regulation 3, that is statement of the grievance redressal mechanism. So within 20 days from the end of the quarter, we have to also check this compliance. Now the half yearly compliance, this is a regulation 40 compliance is important. Now this certificate is most of the time which is given by the practicing company secretary. So this certificate is basically in which we have to mention that in case of any transfer of shares by company during the particular financial year, then we have to mention in this certificate half of the financial year. Now we have to mention in this regulation 40 subregulation 10. Within 1 month, regulation 7 subregulation 3, that is share transfer agent compliance certificate. Again, it is a compulsory part. We should take this certificate from the registrar and the trademark agent. So within 1 month from the each half of the financial year, we have to compulsory intimate to the Bombay Stock Exchange BSE. This is the annual compliance, which is very easy, that we have to pay certain fees to the stock exchange. We have to submit our secretarial compliance report for the listed company as well as unlisted material subsidiary. We have to also file auditor reports, financial results within a financial year. We have to file annual report. So the, as I said, because it's easy to check all the members whether they get these copies via mail or via speed post. So they can easily check if they want to check their financial statement of the particular company. So they can easily check this annual report. So these are the basically compliance. These are the compulsory compliance for the private company, public company, or the listed company. And this PPT will, which will be easily to understand that the what are the compliances is required during the particular quarter, monthly or half yearly or yearly. So which will be easily you can understand compliances are there. We have to file for this specified period. If we have to not file within specified period, then the heavy penalty which will be bad to the client, and heavy penalty which is a bad charge by the MCA. So this is the important point that we should remember. So during the quarter, each and every compliance of the regulation that we have done. MVP1 quarter 1, that is April to June, MVP1, DIR8, MSME1, DPD3. Again, this all the forms which are mentioned in this private companies are again this section or this compliance or these forms are also applicable to the public company as well as public listed or public unlisted. So this is not here I mentioned that MVP1 and DIR8. Again, this MVP1 and DIR8 is also applicable to the public company or the public unlisted or listed company. MSME1, if MSME1, if your supplier is a registered under the MSME, then yes, we have to file this MSME1. But if your supplier is a not registered, all the suppliers are not registered is under the MSME, then we should not require to file this MSME1. Second condition, as I said, the outstanding payment is exceed the 45 days. Then we should again this file MSME1 form. Next one, that is the DPD3. Compulsory, we have to file all the public company, private company listed. We have to file this DPD3 form. Approval of financial statement in case of private company, we don't want to take or we don't want to file this MGT 14 form for the approval of financial statement. In case of the public company, we have to compulsory take. Holding of annual general meeting is again the compulsory part. DIR 3 KYC is again compulsory to each and every director. Now, in case of the listed company, we have to also file this KYC for independent director and then non-executive directors. ADT1 is again important point. UC4, MGT7, MGT8. Again, it's important. Now, in case of the public company, Band 2 is a new form introduced. So we have to also file this form Band 2. Private company is not required to file this form Band 2. PAS 6, again, those companies, that means a public company having their shares in a dematerialization form. So they have to submit this PAS 6 within half yearly period for the particular half yearly period. So they have to file this form and as a PAS 6. Now the question arises, the listed company are just intimated this reconciliation share capital audit report. So listed company just intimated that reconciliation of share capital audit report to the BSE, while the public company they have to intimate via the PAS 6 form. EOC4 once XBRL, so it is again compulsory. CFSS, MR3 appointment of or managing directors, full-time directors, manager or KMP. Internal auditor, we have to compulsorily file a DIR 12 form. And whatever the resolutions which is passed by the board of directors in case of the public company, all the resolution must be filed under the MGT 14 form. So it is a compulsory. Apart from this, I have to say that we have to maintain all the register of charge, register of in case of any creation of charge, modification of charge, satisfaction of charge. Then we have to also the maintain this register of any appointment of directorship, register of any shareholding changes in shareholding pattern, register of loans section, registers of any shareholding patterns. These are the compulsory registers that we should maintain. In case of the listed company, prepare the minutes of the audit committee, nomination and remuneration committees, stakeholder relationship committee, and risk management committee. Minutes of this committee, again, it's a compulsory. Minutes of board meeting, minutes of general meeting, minutes of annual general meeting. It is a part of a compliance that we should compulsorily do, and within 30 days, we should sign these minutes by the chairperson. So this is again compulsory. Next one point, this is the whatever in this PPT I have mentioned about the compulsory compliance that we have to done. There are certain compliance which are done for their event basis for in case of the creation of charge, right? So in case of creation of a charge, we have to file the CHG1 form. In case of the satisfaction of charge, we have to file the CHG4 form. So this is all are the event based form. So in case of any event arises, we should file this compulsorily, this kind of form. In case of shifting of registered office from one place to another place, then we have to file this INC 22. So this is again the event basis form. There are certain forms which are the event basis that we should compulsorily file. But apart from all this, we should know this all are the compulsory that we should compulsorily file with the register. If you not file during the time, or if you not file with the due date, then the heavy penalty we have to pay, and a heavy penalty which is paid by the client. So it is a duty to our professionals that we have to file all this form with the due date. Now, if you have any questions, so you may ask.
Yes, participants, if you have any questions, kindly ask or kindly unmute yourself to ask the question. It is the way. If you have any questions, kindly put in chat box.
Is there any query from anyone of you? And there's a question from CA Vikas Pancholi. In private limited company, is there any limit for directors' remuneration?
Yashri ma'am.
Ma'am.
Ma'am, there is one question from participant.
Hello.
Yes, ma'am, you are audible. You're audible, ma'am.
There is a one question from CA Vikas Pancholi. In private limited company, any limit of directors remuneration? So as I said, that is 11% net profit. This is compulsory in case of the public limited company or the listed company. But in case of the private company, it's not compulsory.
Okay.
And there is one more question. What is the last date to file DIR 3 KYC? Ma'am, can you hear us?
Hello.
Yes, ma'am. There's another question. Ma'am, can you hear us?
Answer.
Yes, any more questions from participants?
Shows. If we carefully shovel away the accumulated sand, we are certain to see the layers on which construction.
Hello.
Yes.
Hello, sir. I have a question. Yeah, in case financials not finalized by 30th June, can we proceed with previous year financial data, sir, for filing DPT3? Hello.
Sir, can you put your question in chat box as
I repeated for 3 times, sir, but I did not get reply.
actually due to some technical issues, she's not
Yes,
able
sir.
to hear our voice. That's why
No. I typed in the chat box also, but I did not get reply. I typed 3 times.
You have already typed.
Yes.
Okay, let me see. Sir, can you post it again so that
Yes,
it
fine.
comes out?
Yeah. Hello, sir. Just now I posted. Hello. Can you hear me, sir? Hello.
Where you have posted, sir? In chat box only?
एक काम कर सुनो वो इधर नीचे में किसी को भेज रहा हूँ तुम कहाँ मिलेनियम की साइड हो क्या ये मार्केट मिलेनियम ये है ना 2291 वहाँ पे
There is a one question from CA Mukapati. In case of financials which are not finalized by 30th June, can we proceed with the previous year financials from filing from of DPT3? No, you cannot proceed with the previous year financial year, DPT3 for this particular financial year. In case of if you are not prepare financial statement for the 2020, that is 31st March 2020, then you cannot based on judgment DPT3, you cannot file the DPT3 on the basis of 31st March 2019. So this cannot be possible.
Okay. Good.
Still, if you have any doubts, so you may please ask about related compliance with the private company, public company, listed company.
Ma'am, I think there is no question from anyone. So, on behalf of all the participants and the Surat branch of WIRC of ICI, I really thank you for taking out time from your busy schedule and sharing your valuable knowledge with us. Once again, thank you, madam, from all of us. Thank you.